Good morning. My name's Alan Pangbourne. I'm President and CEO of Chesapeake Gold, and I'm here this morning with Matt again. How are you doing, Matt?
All good, all good. Thanks very much, Alan, for joining us. We had a good session last time out about the Met results, and you're sort of continuing work on that, but I don't want to talk about that. I want to talk about the new version of Chesapeake Gold, which seems to be evolving, and I guess the latest iteration of that is some drilling that you've been doing at the Lucy Gold Zone. What can you tell us?
Well, we put a press release out yesterday about Lucy. Just remember, it is an evolving story. We came in 2.5 years ago. Metates was the focus. There was a technology issue. We came in with a way to do it, starting smaller, different approach, lower capital, all of those great things. And I actually spoke with Merlin early September sometime about the latest metallurgical results, which I'm sure investors can go and find and have a look at those and listen to that interview. But today, as you said, Lucy is the latest in that. When we came into Metates, I brought in the ex-chief geologist from SSR, where I was the COO. And we started working through all of these regional projects that they'd acquired, but hadn't really done a lot of work on. And Lucy caught our attention because there was a couple of trenches they did some time back, which showed some interesting anomalous gold samples, but they were hand grab samples, and they can be awfully biased because geologists only pick up the pretty colored rocks. So we've been doing some work slowly in the background on all of these projects, and Lucy, as we put the results out yesterday, has come back with some amazing results over 500 meters. It's a skarn deposit from surface, 6 grams a tonne over 24 meters. There's samples within it, anywhere up to 19 plus grams a tonne. Really exciting deposit in Sinaloa. So it's the next step with how do we create value for our shareholders.
Right. Okay. So yes, you mentioned from surface some of these numbers that you put out there. I mean, it's early days. I mean, how many holes are we talking about so far?
Total, there's 14 holes. The first 4 were on a different structure, and they didn't work out. And then the rest, there was another 6 holes we put in on this structure, and then we put in another 4 on top of that when we found some interesting ones to try and get an idea of how extensive it was. And as I said, it's about 500 meters long, 1,700 meters of drilling. And some really exciting intercepts, which being all oxide in a reasonably flat area, 6 grams a tonne, 4 grams a tonne, up to 19 grams a tonne. We don't know what we've got, but we've got the tail of something, and it's a great start.
So what do you do? Because obviously up until now we've been Una Metates has been, pardon me, has been the talk and the discussion and the problem child and how do I solve this, and it's been a sort of, you knew what you were walking into, but it's been a tough road, right? This is what to you? What does this do to the story, and how do you come at this?
So it adds another arrow to the quiver, right? We've got Metates. It's massive. It's got a metallurgical issue, and we're working away diligently at that, and we're advancing it piece by piece, and we'll continue to do so. But at the same time, we needed to look at all these other bits and pieces that were in the portfolio, and was there anything interesting there to decide, do we keep them, do we drop them, what do we do with all of these? Because, if you've just got them sitting there, they can be a distraction and a bleed on cash. And so this one in particular had some very interesting grab samples of 10 odd grams a tonne in trenches. So we cleaned them out, redid the trench, saw cut it so as it wasn't biased. That was the first thing we did. And we went, 40 meters at 4.4 grams a tonne. Yeah, that's not bad. And so then the drilling was the next step to go underneath it. And, I believe you've got to get enough of the story to put it out first, rather than just put one hole out and then wait, one hole out, then wait. Because if you do that, sometimes the next hole's a duster, and then what do you do? Whereas now we know we've got something interesting that you can potentially move forward, and it could be a second asset, development asset for us that you may actually be able to get into production easier and quicker than Metates, which will give us cash flow, which will help fund the ongoing work at Metates.
Exactly the question, because it's you talk about problem children, but you also talk about favorite children, and you kind of got to work out what I'm intrigued in terms of your thinking. I get that it's early days, but it's $100 million company. You've got X amount of dollars in the bank, and you're gonna have to work out how you prioritize and allocate that capital to get the best return on capital invested. Now, people got a little bit excited when you put this release out, quite rightly, because the grades are good, it's shallow. And it's indicative of something that could actually be, in the short term, more valuable than Metates for you, in terms of the way that people value you.
Yes.
Right? So Metates is huge, the potential is huge, but it's an ongoing, it's an accretive process you're going through. So how do you intend to allocate your capital? You've given us a clue there. It said it might be a nice short-term stopgap for you in terms of trying to build some value there. Have you had thoughts about what you do in terms of the drill program now? You know what you know?
Look, it's open at both ends. We're not really sure on where the dip is either. So we need to understand a bit more around it, and that probably needs putting a few more holes in. There's some obvious gaps, under Trench 7 and down to the southwest, Trench 1, there's no holes under that. And so, there's obviously a few gaps in it at the moment, but given the success rate that, up and down that structure, we hit continuously mineralized gold mineralization, the system is mineralized. There's no doubt about that. Now it's how big is it? How wide is it? How deep is it? Where the hell does it go? Skarn deposits are easier to drill and get tonnage than narrow vein, high grade deposits, because you drill hundreds of thousands of meters to prove up 2 years worth of ore on those. They're not as good as porphyries, but the skarns tend to be high grade. So it's a nice type of deposit to be able to build a mid-sized gold operation on. Metates is the other end of the scale. It's a massive deposit that, with our technology, it will allow us to come into it slowly and then expand. So as far as assigning capital, the capital spend on Metates going forward is predominantly met test work. That only costs me $100,000 a month. So it's not a big spend when you've got $20 million in the bank. Drilling at Lucy, you can quickly start spending $1 million or so to infill drill that. So we've got to be careful to not just go crazy and pick strategically what do we need to know to improve our knowledge, and specifically where do we need to punch another hole, where do we need to do some more trenching maybe, which is even cheaper. So it's not everything now goes to Lucy. That is not the plan. But you can't walk away from 500 meters with grades where everything is over 0.5 gram. You just can't. So, we want to advance this as well. We've got the people, we've got the money. I'm not a poor junior that's running around trying to find enough dollars to keep the lights on. We've got $20 million in the bank. So we should be assigning some of it to Lucy.
Absolutely. But what excites the market, and it's typically those higher grade numbers that you put out. Okay, that's what's going to be getting the juices flowing for I suspect, for the market. If you go and do a bunch more work and it does come back on average at 0.5 gram, what do you think that would do for that kind of sentiment? What would it do for your decision making? In fact, would you argue that that's still a good project?
Given it's close to the surface and it's oxides, yeah, it could potentially switch to a heap leach, which, again, at 0.5 gram to 1 gram is economic. There ain't many 1 gram oxide heap leaches around that that haven't been mined yet. So there are multiple options. Just given the grades we've got at the moment, I mean, you don't put 1 ounce material or 6 gram material in a heap leach. You just don't do that. 70% of 6 grams is not what you do. You put that in a CIP plant, a CIL plant, and get 90% recovery because the delta on recovery pays for the additional costs. So it, until we know what it is and how big it is, you can't really say how you're going to process it. These grades will support a CIL plant. These grades will support a heap leach. Yeah, even if your cutoff was down at 0.5 and you ended up at 1.5, 2 grams, that is still a great heap leach. If it's 3, 4 grams, that is a terrific CIL plant. So either way, the potential here is really, really exciting. And it's cheap because you can build a conventional CIL plant or a conventional oxide heap leach very cheaply. There is no technology risk at all. Everybody knows. Earlier in my life, I used to run a gold engineering company. We used to build in 12 months CIL, CIP, heap leach plants for the gold industry up and down Chile in 12 months. Yeah, and they are cheap. If the climate's right, you don't even need a building. It's just 6 open tanks with a mill in front of it, a crusher in front of that, and you're done. There are hundreds upon hundreds of examples of how simple, cheap, fast you can build these sorts of things. That's what Lucy could be.
Okay, so it's not just about grade. There's a bunch of other variables there. So wherever the grade ends up, this thing can make money, is what I'm hearing from you.
Oh yeah,
potentially. Right. Okay.
So these sorts of grades, yeah.
Okay. So let's look at, in terms of some of the decision making that you've got to do, some of the data that you've got to gather. It needs a few more holes, a few more infill holes, and there's a few gaps so far. Because whatever, would you say 14 holes in, right? So is that right?
Yeah. Yeah.
That's right. So how
13,
much
14.
more money? How much more drilling in dollar or meter terms do you think it's going to take for you to kind of get some level of confidence internally around how this thing, progresses, what this thing looks like, what it could be?
Look, I mean, given it's open in so many different directions, that's really hard to answer because you don't know what you've got until you put a hole in it, right? So we obviously want to test the extensions along strike. That's a dead simple answer. I'd have to go back and pull what the budget was, but it wasn't a lot of money to drill these 1,700 meters. It's cheap drilling because it's so shallow. So you're not trying to drill kilometer-long holes, which get really expensive. Yeah, so it's cheap drilling. We're not assaying for things that are complicated. It's a very easy access. It's flat. You're 5 Ks off a highway. There are other companies around us in Sinaloa in that area, all using the same drilling contractors. So it's not an expensive exploration program. We're not having to use helicopters. We don't have to complain about the weather, the way it's freezing cold or too damn hot or whatever. We can work on it all year round. So we just need to sit down and understand in more depth what all this means. Where do we want to look next? Yeah, there's some obvious gaps when you look at the long section, both within it and to the two ends. We need to understand which way the dip is. I've only got one set of holes that suggests it dips to the south. And as you can see on the plan, we don't have any holes to the south, right? I want to see if I can find it again down to the south.
Right. Okay.
Yeah. And then have some idea at depth, because I don't know how deep it goes. I don't know depth.
Right.
I don't know strike.
And I guess what I'm trying to work out is that you could have evolved the economic study. When we first started talking, this was a $3.5 billion capex. It's now what, $360 million dollar capex. Effectively the same pre-tax NPV number on this thing, but obviously it's producing, I don't know, like a third of a number. The PA suggests sort of 100 and just under 150,000, I think, from memory. So you've kind of changed it to make it more relevant, but you've also made it smaller and more manageable as a result. And I'm wondering in people's minds just that you haven't necessarily seen that reflected in your share price, because I think you've still got a job to do technically in terms of the network to be definitive about what the optimum recovery rate that you're going for is. Not a case of could you achieve, but what makes sense economically for you to aim for. With this addition, obviously it's another new element bolted on here, and I think it's giving a sort of new lease of life, and it's also, I guess, shortening the time frame to some kind of either monetization event should you decide to flip this out, or revenue generating component, because if it is heap leach, for instance, that's quick. 12 months build. You could probably work that off of a PFS potentially, because it's simple technically. So do you think that the market's starting to understand what you're trying to do, what's in your head in terms of the business plan here? Because it couldn't go on like it did, and it feels like you are slowly changing it.
When we came in 2.5 years ago, we had a pile of stuff, right? The focus was obviously Metates. We had the theory around how we could find a higher grade core because it was so big, it probably got smeared. That was proved to be right. We had the technology. We're getting there with that, the metallurgical recoveries. And then we had half a dozen of these little projects that had been picked up over the years, and nothing much had been done with them. And so, as I said, we brought in Carl. He's a geologist I've known for many years. Trust him. He's been right most times that we've done stuff together. And this one was interesting. At the end of the day, you're trying to build a mining company. Would I love Metates to be further ahead and we're ready to go and build that tomorrow? Yeah, of course I would. But don't walk away from something else that is valuable. And that's what I was trying to make sure we didn't do. Look at these other projects. What have you really got? Is there something there that's interesting? This is beyond interesting. Yeah. If it was 1.5 grams, I mean, you see these intercepts 0.3. Yeah, thank you. But, this is 20 times that. Yeah. And grade helps. Man, does it help. You can build a much smaller, cheaper project on a high-grade deposit than you can on a massive low-grade deposit. Yeah? And get the same result. And at the end of the day, what's the result? You're trying to create value for our shareholders. And don't forget, I am one of the large shareholders in the company. So, this adds another avenue of where we can generate value in Chesapeake at the end of the day. And how do we get the best value? It depends. What does it turn into? Does somebody walk in and say, hey, we want to buy Lucy for $200 an ounce? And how many ounces have we got at the time? I don't know. But we're going to keep moving forward, both projects. We're not going to exclusively focus on one at the cost of the other one. As I said, the met test work at Metates is not expensive to keep going. And that is the key moving forward to Metates. At the same time, Lucy, you could spend $1 million or $2 million, fill in some of those gaps and come back in 6 months with, here's the rest of it. And it's now, I don't know, pick a number, 1 kilometer long. And here's some more 6 gram, 5 gram, 3 gram intercepts in between. It all's hanging together. It dips to the south and it's X meters deep. I don't know. That's the unfortunate thing about exploration. When you do hit something, you don't know what you got until you do the work. Yeah.
Right. Okay. So dual track, Metates, Lucy, one technical one conventional. The other things that you as the CEO or the board need to do is obviously money, finances. You got 20 million in the bank.
Yeah.
Take no concerns there, and in a meaningful way, the market can do what it wants for now. But you're also going to need to kind of like feed stories into the market. Now, it's a very risk-off market, but people are listening and watching. They're trying to work out what is, properly, genuinely undervalued, what does have leverage. What's next from you? Because you're going to need to keep talking to the market. You can't sit back and do nothing for 6 months, a year. What's the message?
So we continue to go forward with both. So as I think I said in September with Merlin, the next step on Metates is to run those existing columns out and get the recoveries on that new chemical scheme that is giving me a faster oxidation rate, a higher oxidation rate. That then leads into the PFS next year, right? So that's still going on in the background. Come back over to Lucy. We've got to sit down. I'm going to be in Mexico next week. We'll go have a look. Yeah. And sit there and go, okay, so what do we do next? We're coming into budgeting season. Sit down with the board. Hey, I want to assign X over here, Y over there, and put together the plan. The obvious place, I want to put a hole under trench 1. That gives me an extension to the southwest. There's a couple of gaps on under trench 7 and between Lucy 10 and 6. What's going on there? I need to get some holes to the south. So there's probably 5 to 6 holes that you want to poke around to see if it does extend north and south, northeast, southwest, dip to the south. Try and start closing in on it a bit better and see where it goes. And,
okay.
As I said, we can do that pretty much all year round for Lucy.
Okay. Well, so next time we can expect to hear from you is when?
Met results in December, I think. And whatever we do with Lucy, late this year, early next year.
Okay. Well, look, stay in touch. Really interesting to hear what's happening with Lucy. Pretty exciting on the face of it. I guess we just need more of the same, please. See you soon.
Even better grades would be good.